You're watching Captains of Industry here on CNBC Africa. I'm chatting to Graham Briggs, the CEO of Harmony Gold. Thanks for joining us.
Thank you.
The gold industry right now is a tough one, particularly in South Africa, and we'll go straight for possibly what keeps you awake at night, that being, I'm assuming, labour and the fact that wage negotiations are once more upon us.
Yeah, it's obviously one of the big issues coming up now, Bronwyn. But you know, the mining industry, I think, is tough right now, not only in South Africa, worldwide. The gold industry a little bit tougher, I think, than most. And why? Because of labour, because we are really quite labour intensive.
Well, it makes up 50% of your costs.
Absolutely. So from a cost point of view, it's the big slice of us. So we have to concern ourselves with labour more so than a lot of the other issues. So yes, you're absolutely right. It's one of those big issues.
If we see aggressive increases coming to the fore from a wage perspective, it means one thing, doesn't it? That you are going to have to make widespread retrenchments, or is that a little dramatic?
Well, I think, you know, the two are very connected. When you're in a situation where you're really on the edge, you know, your costs have gone up to such an extent that the price is almost the same or close to the same. Obviously, a big increase means that you're going to have to cut back, you're going to have to high grade, you're going to have to do all those things if there's a big increase. Yeah.
Electricity is something else that obviously hits you significantly when it comes to operating costs, and I know that you have been much more energy efficient as a group since 2012, but the bottom line is that you still need and consume extensive electricity for your day-to-day operations.
Absolutely, and it makes up nearly 20% of our costs. So you've got labour at 50, electricity at 20, that's 70% of your costs. It's something you have to worry about all the time. Yeah, you know, since 2008, actually, if you go back to 2008, you know, that's when we first had electricity cuts in South Africa. It's a huge issue because it's not only the cost, it's also the supply. And, you know, to be certain that you've got supply, being able to do your things, and I mean, all businesses, I think, are suffering under that. You want to do a certain amount today, and you find that you can't do it because you haven't got electricity. That's a real worry. This is not losing out on your television soapies in the evening. This is losing out on production.
What happens when you have unforeseen stoppages from an electricity perspective in your business? Perhaps you can just map out that scenario for us so we understand how it hits you.
Yeah, since 2008, we've really been to Eskom, and we've got agreement with them that if there's going to be an event like that, they're going to have to give us good warning. And that good warning means that we have to be able to get everyone into a position of safety. And that's basically get everyone out from underground. That can take up to 3 hours. So if there's going to be a big cut and we're going to be part of that cut, they have to give us that good sort of information, get people out from underground. Now, often what they would say to us these days is cut back 10%, cut back 20%, whatever the case may be, and then we can manage it better. We still lose production though.
Kusa Saletu?
Yes.
The curse of Kusa Saletu is fast becoming known, and it's not a laughing matter. But what keeps going wrong? Obviously, you've had the illegal miners, you've had violence over the time that we saw widespread violence in the mining environment, and then more recently, in fact, February, you had the fire.
Yeah.
Hopefully that's the end of the problems.
Yeah, certainly we're hopeful of that. You know, the whole of Kusa Saletu, the old mine is basically mined out now, and what we've been doing in the last years is sinking the shaft deeper, building the infrastructure at depth. So the last restructuring really went for that. It took out, we closed off basically most of the old mine and now focusing on the 5 bottom levels of the new mine. It has been a reduction of staff. But, you know, we're really on a roll now where we can see, you know, where we should be. But there have been many issues sort of beyond our control. The whole violence and the labour issues and so on were really out of our control. But we're certainly hopeful that this new restructuring, we've now got people on our sides. And now, you know, everyone recognises that, you know, if we don't get it right, there's more people to be put on the streets, and we don't want that. So I think everyone's really attuned to it, and we can see production picking up.
This should be the brightest asset in the Harmony Gold fold. Is that correct?
It should be, but it isn't. And that's unfortunate for Kusasalethu. The area where we're actually making best profits is a mine called Bambanani in the Free State, where we're mining basically the remnant shaft pillar from predecessors who used to own those shafts. So, you know, that's probably the area that we've been most successful in the recent times, making the most money, most profits.
You've been in cost-cutting mode for some time now, and there is more to come. How much more, Graham?
Yeah, Bronwyn, it's a case of looking at the gold price. You know, people don't really see this, but since probably mid-2011, the gold price has been static in rand terms. So we've seen, you know, everyone talks about the dollar gold price, but if you look at rand terms, cost per kilogram, somewhere between about 430 to 460,000 rand a kilogram. It's been flat. Now,
and your input costs have just been rising dramatically.
If only our Eskom costs had been flat, if only our labour costs had been flat, but they haven't. They've been going up at, well, more than inflation, as you know, in the mining industry, and that's really biting us hard. So we've been looking really at the last two and a half years, we've been cutting costs, keeping costs down, as have a lot of other companies as well. So cutting back on capital, and that's new capital for new developments, cutting back on any exploration, reducing the sort of non-essential staff. Not that it's not essential, but in times where it's tough, you have to really look deep and reduce that number.
You've got a moratorium on new hires. In fact, if people leave, you replace them within the group at the moment.
Yep, exactly.
But again, coming back to 70% of your costs being firmly in labour and electricity, you don't have that much room to manoeuvre.
Well, there's a few other things you have to do. I mean, you have to look at the ore body, you have to see if you can push the grade up a bit, get the grade up. That naturally means you will sacrifice somewhere. You might sacrifice on the life of mine. And so you need to try and get that grade up, because then you get more kilograms for the same tonnage. So you have to look at those things, but you have to look at everything. Every input cost goes through scrutiny, no matter where it comes from, what it is, whether it be a contractor, whether it be a supplier supplying whatever widgets into the mine.
The broader operating in South Africa from a mining perspective and regulation is another headache. And potentially, let me rephrase that and say unclear regulation. How big a problem is that for you in operating in the South African environment?
Yeah, I think when it comes to Harmony, you know, we're quite clear where we are from a regulatory point of view. We have regulation and we follow it, and we will comply to it. Where we don't comply, we deserve to get jumped on and dealt with. And where we don't comply and it's interpretation thing, you know, that's where we have, you know, discussions, arguments, or whatever the case may be. So that's a case. I mean, the regulation is there for a reason, and we should comply. And because we don't comply for some reason, it's either because we can't or there's some issue. So that's where the discussion points come in the mining industry, particularly on regulation.
Are you concerned about the clarity when it comes to regulation, or is that already put to bed? Are you happy with the way the industry is regulated?
Regulation, I mean, there's always interpretation, and there's, you know, if you, it's a bit like going and getting a traffic fine in Australia. There is no discretion that the traffic cop has. You know, if you've done this, this is what you get. There are some areas that there's discretion in this country, and that's where the rubbing points are, and that leads to different interpretations.
Graham, you mentioned Australia, and prior to coming to South Africa to head up Harmony Gold in 2006, you headed up the Australian operations for Harmony. How did the two countries differ? I suppose some time has subsequently passed, but are there very similar operational elements between the two countries?
Yeah, I think if you're looking at mining internationally, very much different, because, you know, this is very labour intensive here in South Africa. You know, it's a case of almost sometimes you have to ask yourself, would these ore bodies get mined if they were elsewhere in the world? And that's a question worth sort of pondering on if you're sitting in my position. Yes.
And would they? What is the answer to that?
Well, I think we can actually mine. We've demonstrated in the South African mining industry that we can do things a lot safer than many other industries. Years gone by, we couldn't. So safety, I think we can almost tick it now and say we can do these things safer. I mean, it sounds very dangerous whenever you talk underground mining, but the statistics are such that they're in a much safer area. So I think you get the tick. From a cost perspective, though, and an exposure of high costs for very little gain, I mean, that's where you've got to say, but this isn't really great business, and how can we make a better business model of it?
Is it possible to make a better business model of it?
Well, you know, the real problem is mining hard rock and mining narrow reef, flat-lying hard rock. I mean, that's the nub of the issue. So to do that mining of hard rock, you have to drill and blast, and to drill and blast in narrow reef, flat-lying stopes, you need handheld drills mostly. Mechanization and those sort of things have really not made great advances. There are a few areas, but really that's the nub of the thing. Unless we can make a breakthrough in mining hard rock, it's really going to be a struggle for the South African gold mining industry in the future.
Well, let's move to Papua New Guinea and shift our geographies. Wafi-Golpu, and where you are at, I believe, in the second stage now of feasibility. Would that be the appropriate terminology?
Yep. Yeah, so it's a fantastic project, a big copper-gold project, more copper than gold. And it's a big ore body, so it'll be big mechanized underground mining. It's now in the feasibility stage for the upper parts and pre-feasibility for the lower part. So it's going according to plan.
The share price ran like wildfire when you first announced Wafi-Golpu and your intention to extract value for shareholders. And then obviously somewhat subdued now, considering it hasn't come to fruition as quickly as perhaps the market anticipated. Did the market get ahead of itself?
No, I think there's it depends on the shareholder. And, some of our shareholders obviously are longer term shareholders, but a lot of shareholders these days are looking for value right now, here and now, this week, some buy in the morning and sell in the afternoon. Now, this is a project that is only going to get into production 2020. So you have to be
You've got to have a long-term horizon here.
So you need a longer-term horizon shareholders to do that. So if you were a traditional buyer of a South African mining company looking for dividends, that's great. If you're looking for a company like Harmony, which is actually not paying dividends but plowing its money into a Wafi-Golpu, then you've got to say, but what's the investment scenario here? Look, I think it's going to be a fantastic mine when it's built. It's going to have very long legs. It's going to last for years and years.
Is this going to change the story for Harmony Gold come 2020?
It's a complete change, game changer, completely. It's a completely different asset. It takes you into copper as opposed to gold. If you look at the sort of analysis of where's copper going to, there's a brighter future for copper than there is for gold right now. Everyone's calling gold price flat. Everyone's, the copper price is ticking up. It's in demand. So it's a completely different animal.
Quantify it from a perspective, if you look at Harmony Gold come 2020, how big is Wafi-Golpu going to be in your life?
Well, in 5 years' time, if you're talking flat gold prices, South African gold miners are continued to struggle unless there's a bit of a breakthrough in costs or a bit of alleviation from the electricity crisis, or certainly much lower salary type structures. So, that's going to be a big issue. So 5 years is quite a long horizon when gold miners in South Africa are suffering. So this could be a complete game changer, but let's assume that you know, costs and of course price, you know, notch up a little bit together in the South African industry. There'll continue to be some closures, some reduction in employment, so gold production will come down in South Africa, continue to come down, whereas this thing has just got magnificent potential, and it could get bigger. You know, it's starting off fairly small, and it's got growth potential in the future.
Do you think that mining in South Africa is a sunset industry? It's dying.
No, I think there's massive potential in South Africa. You know, we need to sort of all sit down together and look at the potential. Everyone likes to beat up the mining industry and try and get the extra bit out of it. But it's not a case of, you know, are we not willing to go there? It's a case of in tough times, you just haven't got the ability to do it. So financial ability certainly needs to be understood and not just look mines generally and say, well, they can afford it. So it's a difficult problem, but there's lots of potential in this country, still huge potential. Even a lot of potential in the gold mining industry, but we have to do things differently.
When you say it requires investment, it requires financial resources, do you see foreigners reticent to back South African mining companies,
right
given
now,
the news flow?
Right now, definitely. Definitely. I mean, there are, you know, foreigners are not going to invest in a South African gold miner necessarily, unless they can really see that there's going to be some breakthroughs and some good potential in the future. So, you know, getting that capital from investors to be able to invest in a new project, they're going to say, hang on, this guy is a lunatic, you know, we can't back him. So certainly now in the gold mining industry, investing in another mine in South Africa is not on unless that investor has a scenario where they see the gold price magically going up into the future. But no one's calling that right now.
Let's talk about the gold price. This is something that you must have a number of analysts coming forward and forecasting. Where do you, I mean, do you pay attention to these forecasts? Because again, it's a variable that makes it very difficult to manage your business, and it's beyond your control.
Yeah, a gold miner is an optimist. I mean, by definition, he has to be an optimist. So, you know, we like to see the gold price going up, and we'll look all for the reasons of gold price going up. But if you look at the market right now, everyone's basically calling it flat. Some people are calling it down. Now, you know, there's just, what's the investment scenario? Gold is always a little bit counter everything. The, you know, intuition around it.
There's emotion around gold that nobody can explain.
Nobody can explain. You know, somebody suddenly says gold's going to run and buys a lot of gold, and everyone just jumps on the bandwagon. There's a lot of followers in that. So it's a little bit of counter everything else. But right now everyone's calling it flat, and therefore you have to put a flat gold price in your model.
Even though you're an optimist when it comes to the gold price, you're putting in flat at current levels.
Yeah.
Managing through a tough environment, it's been a couple of years of a tough environment. What is the key to managing a company through a trough?
You've got to have a good sense of humor. You've got to have an eye for looking at the detail, for asking lots of the right questions. Not necessarily knowing the answers, mind you, but asking a lot of questions. Listening to people, because, you know, the guys that work with it every day know a lot of the answers, and sometimes it's just a case of focus. But certainly you've got to keep your sense of humor.
How do you keep people? Because there must be a lot of people within your fold in senior management positions thinking, is the tough environment ever going to end? Is it worth staying in the gold industry? Do you have those conversations on a regular basis with people that surround you?
Yeah, not often these days. Not often these days, because I think it is tough out there. And you know, I mean, obviously senior people can have choices, but when you get down into middle management, I think it's tough to find jobs. So it's a real case of, well, I've got a job now, let me keep it, and let's try and make a go of this and the best of it. And it's a case of management looking at themselves and say, how can I make this better? And I think there's a lot of that reality that's sort of soaked in. So, you know, our turnover is incredibly low.
How do you define your management style?
It's often difficult to define, but I mean, it's complete sort of open door get stuck in, roll your sleeves up, where you have to a lot of face-to-face interaction, get out there, walk amongst the people, get to know the people, have meetings where there's really a problem, a crisis looming, even with the most difficult people, doesn't matter whether it's senior management or the union leaders, whatever the case may be, really be seen and, you know, make sure that you're right there, approachable for them. And sort of, as I say, listen to them as well. It's not a case of telling them what to do, it's a case of listening to them, because there's often some great ideas that come from them.
I've got a number of friends in the gold mining industry, and they're saying that this round of wage negotiations for gold miners is going to set the tone for the South African mining industry, and it's make or break at this point.
I would agree with that. I would agree with that. I think what we've got coming up now in this wage negotiation is going to be tough for everybody, and it's what South Africa actually needs. It needs a bit of a breakthrough in thinking about jobs, wages, profits, all those sort of things meshed together, because, you know, companies can try and get lots of profits. Right now is not the time. A good survival tactic is staying in business for the next while to get the next upturn from a business perspective. For an employee, keep your job, because there is going to be an upturn, and that's when you can get better increases. So having a job is going to be very important in the future. So I think this is a little bit of a turning point, if you like, in hopefully in South Africa. And I'm not saying that the gold miners on their own can do this, but certainly I think what we're going to be proposing in this wage negotiation is a bit of a turning point.
Africa? Does Africa interest you from a future for Harmony Gold?
Yeah, for Harmony, you know, we've never been able to get into Africa. We've tried bits and pieces, and we've tried in various countries.
Why the stumbling blocks? What's been the biggest barrier to forging an Africa strategy?
It's a case of, you know, we're a little bit late in getting to that party. Remember, our strategy was we had a single mine in the Free State. We decided to buy other older mines from other companies who were actually getting out of South Africa at that time for those assets, and so we focused our attention on Africa, on South Africa, and of course they were doing exactly the opposite. They were then focusing on externalizing. So if you look at the story around AngloGold Ashanti, you know, that was a case of getting more foreign mines and less South African focus. It worked well for them. For us, it actually worked well because we actually survived a heck of a lot longer than we were out of the original mine. So we were a little bit late, and you don't go into a country where other companies are well established. They know the, you know, they know the lie of the land and so on. So
aren't there some territories in Africa that are still wide open from a mining perspective, or are you saying that they're saturated, that you've had dominant players go in and kind of assert themselves with no further room?
I think in Africa, where there's opportunity, those are difficult opportunities and probably high risk opportunities for companies. And therefore, that's why nobody is, you know, if there's potential, then that's why nobody's in. So no, for us, I don't think, you know, we've tried, we've looked, and really it's a case of we don't think there's sort of, we can't do anything better than the companies that are there. So, you know, why go there?
Graham, 2016 will be 10 years for you at the helm of the company, Harmony Gold. You've mentioned 2020 as being an extremely exciting year for you as Wafi-Golpu comes to fruition. Are you looking at an extended stay at the helm of Harmony Gold? Any plans?
I think they would shoot me if I stayed on for that long, that's for sure, or something.
But it must be heartbreaking to think, well, Wafi-Golpu's coming to fruition, and I'm not going to be there to reap the rewards.
No, I won't be there, but I'm sure that hopefully the company will be there and really reap the rewards. I think it's a fantastic project. You know, as a CEO, you do get to actually enjoy and like some of the assets, even some of the difficult ones, and you sort of, you know, you get close to the people, and that's what really gets you going. But no, I won't be here until 2020. I don't think the company will keep me on that long.
Life beyond gold for Graham Briggs?
Yeah, I think, you know, there's lots to be done still. There's lots of stuff to be done. You know, it's not a case of I want to go out there and, you know, earn lots of money. I think, you know, there's also time to try and plough back a little bit of skills or what you've learned and so on. So, you know, I'll take it easy in the first stages, you know, once we've done everything here, there and everywhere, and get stuck into something maybe a little bit different, but probably very closely related to mining.
Graham, thank you very much for your time. I've been chatting to Graham Briggs, the CEO of Harmony Gold. You're watching Captains here on CNBC Africa.